Ever checked your credit score on Credit Karma and wondered, wait, is this the real score lenders are seeing? You're not alone. Millions of people use Credit Karma, but there's often confusion about the score they provide. It's called VantageScore, and while it's a legitimate credit scoring model, it's not the only one out there. So, what exactly is VantageScore, and how does it differ from other scores, like the FICO score you might hear about? That's what we're diving into today. Before we get into the specifics of VantageScore, let's quickly recap why credit scores matter in the first place. Your credit score is essentially a 3-digit number that summarizes your creditworthiness. Lenders use it to assess the risk of lending you money. A higher score generally means you're a responsible borrower, making you more likely to get approved for loans, credit cards, and even things like apartments and insurance at better interest rates. Now, there isn't just one credit score. Think of it like different brands of soda. They're all soda, but they have slightly different recipes and flavors. Similarly, different credit scoring models use different algorithms to calculate your score based on the information in your credit reports. Two of the most well-known credit scoring models are FICO and VantageScore. FICO, created by the Fair Isaac Corporation, is arguably the most widely used scoring model by lenders. But VantageScore is a significant player too, and it's the one you see on Credit Karma. VantageScore was developed by the three major credit bureaus, Equifax, Experian, and TransUnion, as a more competitive alternative to FICO. The goal was to create a more consistent and predictive scoring model. So, what makes VantageScore unique? Let's break down some key differences. One key difference is the scoring range. While FICO scores typically range from 300 to 850, VantageScore also uses a range of 300 to 850. This can sometimes lead to direct comparisons, but it's important to remember that the same number in each model doesn't necessarily represent the same level of risk. Another difference lies in how each model handles individuals with limited credit histories. VantageScore is designed to score more people, including those with shorter credit histories. It can generate a score even with just 1 month of credit history, whereas FICO generally requires at least 6 months. This can be particularly beneficial for young adults or those new to credit. Now, let's talk about the factors that influence your VantageScore. Just like FICO, VantageScore considers several key factors, but they are weighted slightly differently. These factors include payment history. This is the most important factor for both FICO and VantageScore. It reflects your track record of making on-time payments on your credit accounts. Late payments can significantly hurt your score. Credit utilization. This refers to the amount of credit you're using compared to your total available credit. High credit utilization can negatively impact your score. VantageScore places a slightly higher emphasis on this factor compared to some older versions of FICO. Total balances/debt. This looks at the total amount you owe across all your credit accounts. Credit mix. This considers the types of credit you have, such as credit cards, installment loans, like car loans or mortgages, and retail accounts. Having a mix of credit can be beneficial, but it's not as heavily weighted as payment history or credit utilization. Age of credit history. This reflects the length of time you've had credit accounts open. A longer credit history generally benefits your score. New credit. This looks at how recently you've opened new credit accounts or applied for credit. Opening multiple accounts in a short period can lower your score. While these factors are similar to those used by FICO, the specific weighting and how each model interprets the data can lead to different scores. This is why you might see a different number on Credit Karma using VantageScore compared to what a lender pulls using a FICO score. It's crucial to understand that lenders ultimately decide which scoring model they use. While VantageScore is gaining wider acceptance, FICO remains the dominant model in many lending decisions, especially for mortgages. So, what does this mean for you as a Credit Karma user? It means that the VantageScore you see is a useful indicator of your credit health, but it's not necessarily the exact score a lender will see. Think of it as an estimate or a benchmark. It's great for monitoring your progress and identifying areas where you can improve your credit. For example, if you see your Vantage scores dropping on Credit Karma, you know it's time to investigate. Maybe you've missed a payment, or your credit utilization has increased. Addressing these issues can help improve your credit health overall, which will likely have a positive impact on your FICO score as well. In summary, VantageScore is a legitimate and widely used credit scoring model, especially prominent on platforms like Credit Karma. It's designed to be more inclusive and predictive, particularly for those with limited credit histories. While it differs from FICO in its algorithms and weighting of factors, it still provides a valuable snapshot of your creditworthiness. The key takeaway is that it's a useful tool for monitoring your credit health, but it's not a direct substitute for the FICO score that many lenders rely on. With that said, thanks for watching, and until next time.